we were thinking that most of the most troublesome times have already been left behind. It looks like it's not the case. So I think this adds a sense of urgency to the discussions today, especially the roundtables about policy that we were not expecting a few months ago. We have to come with policy proposals to deal with the new challenges that we are facing. Just let me share with you a few initial thoughts uh, about this crisis and what the challenges that we face. At the beginning, the almost universal approach to deal with the economic consequences of the pandemic was based on two premises. First, this was a transitory real negative shock of global reach. Second, the combination of the natural evolution of pandemics, sanitary measures, the possibility of developing vaccines fast, allow us to assume that the worst of the sanitary crisis was going to be over in less than a year. So this was going to be a short-lived event. The policy approach adopted across the world, I would say in general, was based on that on the assumption that most of the countries were going to be able to deal with the economic crisis with their own economic means as long as global financial conditions remain favorable. To the credit of central banks and government of the main economic powers, I think this has been the case. Then countries like Chile and many other emerging countries had basically two things to do within the limit of their financial capabilities, of course. One is to provide income support for families to help them bridge the temporary income losses. Second, create conditions so that the financial system not only survive, but contrary to previous experiences, also was going to be able to increase lending, especially to business, in order to avoid long-lasting losses of employment and production capacity. And in fact, what we have seen across many countries is that monetary authorities acted fast and in the right direction. Bank credit to business has been growing in many emerging markets, Chile in particular, in spite of the recession. We can debate if fiscal policies have been enough, adequate, opportune, but in general, what we have seen is that big fiscal expansions with massive transfers of money to, especially to households, have been put in place in most countries. What we are seeing now, though, is make me wonder if we were overly optimistic about the duration of the crisis. Even though we have a recovery in place, more or less in line what we were expecting about 10 or 8 months ago. However, we face a second wave of the pandemic that is forcing most of the major advanced economies into a strict lockdown, and similar restrictions have been put in place gradually in many emerging markets also. This is threatening the recovery and is demanding new policy proposals to confront basically the same problem we had a year ago, but at a time when governments, business, and households are at much closer to the limit of their financial capacities. My personal belief is that we will need more global cooperation to get through this new phase of the pandemic. New support schemes must be put in place, such as temporary financial facilities by multilateral organizations, perhaps some sort of global reinsurance scheme for government sponsoring guarantees to business loans from banks, more funds for vaccination in poor nations, and so on. Even if the recovery proceeds as expected, there are well-justified concerns about long-term negative consequences of the pandemic on potential growth. And this is an issue that will be addressed in this seminar, especially in what refers to the operation of labor market and firms in general. So finally, a couple of comments about the role of central bank in this crisis. One good thing is that so far we have not seen a major financial crisis. Credit is flowing across border and within countries, and financial conditions have helped alleviate the crisis instead of amplifying the negative impact of the pandemic. And I think this is largely a result of monetary and financial policies of central banks across the globe. But of course, this has been possible also because confidence in our financial institutions has been preserved. So local and international savers remain willing to deposit their money in them. This is not only the merit of central bank, it's also the merit of financial regulators, supervisors, and government. At the same time, we have not seen major runs on emerging market currencies, meaning that local and international investors remain confident in the solvencies of government and in the ability of central banks to protect the value of their currencies. In order to have an orderly recovery, we need to maintain this confidence. The big test will come now as more business and households experience financial distress. As the sanitary emergency persists, the risks of bank customers' defaults will rise and the credit channel might be affected. Confidence in the currency requires public debt sustainability as well as credibility of the anti-inflation commitment of the central bank. If any of them come into question, it would be very difficult to sustain a counter-cyclical monetary policy, and capital outflows might force a return to traditional pro-cyclical monetary policy and fiscal adjustment. Well, we have many challenges, as you can see. This seminar, I think, is coming at a very precise time in which we can basically gather together what we have learned during this time using the many new techniques that we have at our disposal, the new data. And so we have a lot to learn about the effectiveness of the new policies, the impacts on the real economy and the financial system of this crisis. So we hope you have let's say I'm very sure that you will have a very useful and very productive discussions, and we might be able to learn a lot about what we can do in this new environment in the coming months. So my best wishes for a very fruitful exchanges of ideas and a very successful experience. Thanks again for your participation.